Welcome to week 4, 2026. This is our switch on hot picks of the week. This week, we're going to look at the dollar index. We're going to look at silver. We're going to look at gold and copper. There's a lot going on in metals. Monday was a huge day for metals. We saw some historical events take place on Monday, and they happened across the board when it came to the metals market. So without further ado, let's go ahead and get into it. Let's start with the dollar index. Now, the USD is one of those assets that sort of ebbs and flows, more rotation than trend. COVID era, we saw a massive devaluation and then a rebound after COVID once rates started getting tightened here in the United States. And now you're still in very much, I would call, sort of purgatory. We're not really bullish, we're not really bearish, but you can see the technical setting up where we think maybe there's a move coming. So take a good look at your fundamentals for the rest of 2026. More than likely, you're going to get a new dovish Fed chair. That's going to lead to rate cuts and potentially drive the dollar down across the other major currency pairs in the world. That is, if it doesn't just touch off a rate cut frenzy and you start seeing those rate cuts out of the ECB and also out of the Bank of England. So we're watching the dollar closely, and always remember this before we talk metals. The lower the dollar goes, typically the higher the metals go. Why? A lower dollar means inflation. It also means there's a lot more dollars in circulation. It's going to take more of your dollars to buy up the metals. So with that being said, let's go ahead and dive into the technicals. This is the US dollar index. This is a chart that we've shown on several occasions. You can see back here, this is a 920 EMA crossover strategy. Back here in May of 2025, you actually had a sell signal. Haven't really done much since then. We sort of came in and rotated around well beneath the 38% level, which is right around 101.55. Really a nice big range. Signifies when Trump was inaugurated into the Oval Office, Inauguration Day 2025. Big time downtrend, then we sort of traded sideways, and now we're pushing further to the bear. So keep a close eye on last year's lows down there around 96.21, but we could definitely be moving down into those low 90s, which I think we get there eventually. I'm not sure exactly when that's going to happen, but right now I would say a slight bearish bias. But just remember, this US dollar is sort of in rotation, so I wouldn't get too carried away and dive into the short side of the market against the US dollar in every pair. All right, here's a good look at our MT5 platform, and this is the chart that we've been referencing almost religiously on our live streams. This is your gold silver chart, and what this basically signifies is you've got gold and you've got silver right here. Spot gold, spot silver, spot gold up over 5,000, trading about 50.40 right now, and then also your silver market's trading up around 107. I mean, just unbelievable levels here for both gold and silver. But the big thing we need to remember here is, what does our gold silver ratio say? We put a video out on this channel on Switch Markets on YouTube. Check that out, the gold silver ratio explained, and you'll see that ratio is the price of gold divided by the price of silver. And just off the top of our head, what are we running? About 50 there, 48, 50, somewhere in that zone. So very, very interesting what's going on with that ratio. Not too long ago, it was 100. So you're starting to see those prices sort of converge as silver rises, and it typically has risen at a much faster pace than gold has. So that's your gold silver ratio coming in. Many industry pros, folks that I've heard from, throughout the financial media, a lot of the folks that have been trading silver for decades believe that gold silver ratio is going to come back down into 37-ish, 37. So that means that either gold's going to come down or silver is going to go up, and it's just going to outpace gold to the bull. That's exactly what we're seeing. So remember, that gold-silver ratio is coming down from its lofty levels that we saw last fall, and you're definitely seeing that silver market is the bullish of the two. There's no question about it. It is moving north with ferocity. In any case, right here, you see sort of that inverted hammer situation. Maybe that's a reversal for gold. I don't think so. You also have the same type of thing that's set up on the silver daily. I wouldn't be betting on those to the short. The trend is extremely bullish. If you get caught short in these markets, it might be the last thing you do as a trader because they are sweeping higher. Let's go ahead and start with silver. Very, very simple technical outlook. Daily chart, you'll notice our spike low that developed back on the 21st of January, and then Monday's epic range. I mean, that is an epic range. Your top's up there around 117.75, and then we sort of pulled back and knocked a bunch of intraday retail longs out of the box. This was incredibly tricky to trade on an intraday basis. That much volatility and volume in the market, you have to be extremely careful with what you do. Your trade locations have to be not just good, they have to be great, because the ranges are so tremendous. That's a $15 range from your high to your low on Monday. We're trading inside of that as we make this video, but you'll notice once we open trade again for that Tuesday session, you saw silver move higher almost instantly by 3%, 3.5%. So there's a lot going on in the silver market. Sort of looking for maybe a rotation going into that Fed meeting. Talk about that more in just a second, but the Fed meeting that we're going to see Wednesday, maybe a little bit of rotation in here, or is it just going to be a straightaway bullish trend? You really have to be hanging your hat on the long side of this market at this point, but the ranges are so huge. Watch your locations. I love support down here, about 62%. If we could get a sell-off down around 100, 180, 101 perhaps, that could be a fantastic retail long where you'd have an opportunity to bid the 100 level. That could be great. Key level to the top side, I would think the next port of call more than likely is going to be 125. Remember, there are no rules. There are no rules on how high silver can go. I've heard analysts talk all the way up to $200, $200 an ounce, $300 an ounce. A lot of people are talking a big game with silver. We just have to stay tuned and see exactly what happens. Remember, it was in our newsletter that we put out there. Goldman and Sachs predicted an average price of silver between 84 and 100 for 2026. That means prices are going to have to come down significantly if they're right. I think they're wrong. I think you're going to see this silver market fueled by all those things we talked about in our newsletter, the Switch On newsletter, all about the supply issues, the weakened dollar, geopolitics. I mean, all of it really does point to the bullish side of this market. And that key level of 100 more than likely is going to be downside support. Watching that closely, definitely alongside bias. Gold's not nearly as complex. It really isn't. I mean, right now you're up around 5,000, 5,035 as we make this video. But once again, you trended higher to open by about 0.5% to open that Tuesday session. Big time move. We would love a deep pullback. I would love a deep retracement, something we could sink our teeth into, maybe knock out the retail longs and give us a shot maybe to bid down there 48.95, maybe 49 even. That would be a great trade. I'm just not sure that we're going to get it. I'm really not sure we're going to get it. So I would take this right down to a 4-hour chart. Good look right there at what happened in today's gold market. Really a significant intraday sell-off there for that U.S. session. You've got basically you're coming off about 2% during that U.S. session. Knocked out a lot of long traders, came right back down to our 5,000 level, and we traded beneath that briefly, right around 49.90, and then we bounced. So I would still be looking at 5,000 is your big round number, your key level, the one that you want to keep an eye on. Definitely, as you roll towards that Tuesday, Wednesday Fed session, I think that could be a great support zone. Would be right around that 5,000 area. So I'm keeping a close eye on that. We could not sustain trade beneath 5,000 for very long Monday, and then we bounced right back up about $50. Well, more than that, about $60 very, very quickly on the Tuesday open. Still very bullish here. Watching this closely in this gold market now. As far as what we have here, this is copper. Now, not too many folks trade copper. Copper is a fantastic market. A lot of folks believe it's the next WTI crude oil with regards to a commodities market. So we look at this and we say, what are all these levels? Well, we had all sorts of levels that we were looking at going into last fall's trade. You had $4 a pound, which was a big round number. You could see we sort of had that crazy pullback in April of 2025, the tariff panic. We bounced off of that. We saw the huge volatility of July, which really just crushed retail longs and came back down and sort of rotated. And then 475 was a nice compression area. 516, we sort of saw a nice demand zone develop right around that 5 level. We had a weekly high quite a while ago that was about 516. So 2024's lows were well above those. We've tested the waters above 2025's highs. So at this point in copper, I'm still extremely bullish. I would wipe off pretty much everything off my chart. We've traded above 2025's highs. The bullish trend is on with metals. Maybe we get an opportunity to buy a pullback bid in copper. Right there, 38%, right around 539, somewhere in that zone. Could give us an opportunity potentially to get long with a little bit of meaning later in the week. So I would be watching this. So our keys to this week's trade, we're going to be watching the United States Federal Reserve on Wednesday. Join me for FOMC Live. We'll cover the presser. We'll check out what Jay Powell has to say. That's going to be your key 5-star market moving event. The markets believe that interest rates are going to stay static right where they're at. I'm looking for a combative tone out of Jay Powell. I think you're going to see an incredible trading session highlighted by Jay Powell being defiant and going against the Trump administration, citing high inflation and a potentially stronger than expected jobs market as being the two reasons why interest rates are going to stay higher. So essentially, that's what we're looking at for this week. The U.S. dollar is in a position to really put on a major bearish dump. We're not there yet, though. We'll let you know on our daily live streams when we enter severe bearish territory for the USD. Silver, the uptrend is dramatic. I'm looking at 125 to the top side potentially. Gold, I love 5,000 as being just an area of intermediate to really midterm downside support. I think 5,000 is an area where we're going to become compressed for a while. I'm going to be looking for 4-hour hammer candle formations to set up right around that 5,000. We're going to cover those in the daily live stream as well. And copper may be the best market of them all. It gives us a better chance to buy into maybe a monthly Fibonacci retracement, which is down there at about 539. Given the volatility that we've seen over the past 24 hours in metals, that is very possible that we get that level. So there you have it. That's a good look at the U.S. dollar, silver, gold, and copper. If you need anything else, be sure to head on over to the howtotrade.com, sign up for a free account. You can direct email me, and I will answer any questions you want via private message. Be sure to check out last week's YouTube video on this channel. We're going to have another one out this Thursday as well, and also our daily live streams. We've got our live trading webinar for Thursday. It's going to be how to trade gold and silver. You got to tune in for that. I'm going to give you all the details on how to trade these hot commodities, if in fact you haven't traded them before. And then we've also got FOMC Live Wednesday. I'll have Jay Powell, all the volatility. We'll do some high-impact scalping, and we'll definitely get after it, talk a little monetary policy and where we're headed in these markets. All right, everybody, that's week 4, 2026. Welcome back. Trade the action well. Get switched on, and we'll talk soon.